Daily Fiscal Pulse for the 13th of May, 2026. Here's what moved through the system in a single trading day, tracked through Wednesday's close. Before we get into the numbers, let's acknowledge what's capturing market attention. There's no singular narrative taking hold across the board. That said, Cerberus has been hard to ignore, posting a 68% surge on its Nasdaq debut and landing a $95 billion market valuation. That's the kind of headline that reverberates through the tape. Against that backdrop, we'll turn to what the fiscal flows are actually showing us. We saw considerable activity on the spending side today. Net transfers totaled $37.0 billion, with household transfers driving the majority at $33.7 billion. That represents a meaningful injection of liquidity into the financial system. Here's what's noteworthy. Equities are holding their ground despite headwinds. ES futures settled at 7,421, maintaining a position above the 20-day moving average of 7,186. The 20-day range extends roughly 601 points from top to bottom. The resilience is there even as fiscal conditions remain mixed. Looking at the velocity of spending paints a revealing picture. Over the last 5 days, government spending is averaging about $10.1 billion daily. Zoom out to the 20-day window and that figure drops to $1.2 billion per day. The difference tells you household flows are the primary engine pushing money through the system. The year-over-year comparison shows a consistent pattern emerging. Fiscal year-to-date spending stands at $849.5 billion, which represents a roughly 26% decline versus the same window last year. That's a significant pullback in fiscal stimulus, and it's worth noting for liquidity considerations. From a market positioning angle, the fiscal backdrop isn't tilting the scale sharply in either direction. Our conditions gauge reads at +8. Historical context matters though. We've observed similar setups multiple times, and despite tighter liquidity conditions, the S&P has averaged around +0.7% over the subsequent month. Liquidity and price don't move in lockstep. Leveraged funds are trimming positions while margin debt sits at the 100th percentile, which is notably elevated. Historically, that extreme tends to function more as a caution signal than a confirmation of upside. We've now seen fiscal transfers climb for 2 consecutive days. Our analysis shows this pattern has typically preceded near-term strength in ES. It's not predictive in isolation, but it's a signal we monitor. 2 items warrant attention as we move forward. The 15th of May brings a Treasury coupon interest payment window, which typically drives a substantial reserve injection and can shift near-term flow dynamics. This is the next major coupon interest payment event on the calendar. The fiscal picture lacks a clear directional bias at present. What happens with the scheduled flows ahead could shift that equation. We'll be watching closely.